Hello guys, my name is Milla. Welcome to my YouTube channel. In this video, we're going to be discussing 8 of the best Dividend Aristocrat stocks to own for life. Now this is the highly suggested video, so shout out Kevin and Luis for suggesting this video. So I decided to do 8 of the best Dividend Aristocrat stocks to own for life and hopefully buy and hold forever. So let's get started in this video of what is a Dividend Aristocrat stock. So on your screen, we can see that a Dividend Aristocrat is a company in the S&P 500 index that not only consistently pays out a dividend to shareholders, but annually increases the size of its payout. So every year, this dividend stock will be continually increasing its dividend payout to you as an investor, so you can see higher dividend payments annually and even quarterly. And number 2, a company will be considered a Dividend Aristocrat if it's raising its dividends consistently for at least the past 25 years. So we're going to see at least 25 years of consecutive dividend payments and dividend growth in that space. So that's what's a Dividend Aristocrat and what qualifies as a Dividend Aristocrat stock. And number 2, we're going to see what are the benefits of buying a Dividend Aristocrat. So for one, it's going to be a large established company enjoying steady profits that pay a great dividend to investors alongside stock price appreciation. So if a dividend company like a Dividend Aristocrat is going to be large, it's going to be making a lot of money, a lot of revenue, a lot of net income and gross profit. And so it's going to be paying out a portion of these profits to you as an investor for holding an investment in its company. And if a company is going to be making profits and revenues year over year with consecutive growth in the dividend, most likely they're going to be making a lot more money year over year. So they're going to have a lot more disposal of dividends to pay to you as an investor. So what happens with that is we're going to see good stock price appreciation and growth. So you as an investor can not only get high dividend payments, but high share price growth on top of that. So you guys can have a better stock health and stock portfolio. But number 2, it's going to have a stable earnings, like we said, and strong financial health. Number 3 is that these Dividend Aristocrat stocks are going to be largely recession proof with growing dividends in good and bad times. So if it's going to be recession proof, it's going to most likely be less volatile. And when stocks go down in a recession, the Dividend Aristocrat stocks most likely have products, wide moats to where in a recession, consumers will consistently buy their products. It's going to be very sticky. And so these companies can still make a good revenue and profit and in turn raise its dividends to you as the investor so you can enjoy some sweet passive income. And the 4th benefit of buying a Dividend Aristocrat is it's going to have a lower beta. And what a lower beta means is that it's going to have less risk and lower volatility. So a beta of 1 is basically correlated with the markets or the S&P 500, and a beta lower than 1 is going to have less volatility and less risk. So a Dividend Aristocrat stock is going to be less risky, less volatile, but still provide some great returns and great dividends to you as an investor. And those are going to be 4 amazing things as to why Dividend Aristocrat stocks is going to be the best method or one of the best methods to invest long-term for investors if you guys are looking for a good investment with your money. So those are the background knowledge you guys need to know about a Dividend Aristocrat stocks. So I have 8 of the best to own for life, and I've used M1 Finance to kind of show my pie, and I'm going to be linking in the caption of this video this exact pie that I've made of the 8 best Dividend Aristocrat stocks to own for life. So we have all 8 of them. We have Procter Gamble, PepsiCo, McDonald's, Caterpillar, Coca-Cola, Johnson & Johnson, Walmart, and Realty Income. So those are my 8 that I've chosen. And we're going to go one by one and kind of look at their dividends, their profitability, and their returns versus the S&P 500. So let's get started with number 1 being Procter & Gamble. So we can see on M1 Finance, Procter & Gamble, ticker symbol PG, operates or engages in the provision of branded consumer packaged goods. So if we look at their website, we can see that this is going to be a really big consumer company with a wide range of products and brands. So we can see PG's brands on the website. They own many different things like baby diapers, fabric, family care, hair care, etc. They own all these different products, and all these products are going to be products that are going to be very recession proof and very sticky so consumers can consistently buy all of their consumer branded products. That's what PG does. If we look at what they do, they're a consumer non-durable company and a household personal care company. So you have all these different products. You guys can check out the website on M1 Finance. And if we look on Seeking Alpha, now I am affiliated with Seeking Alpha to bring this kind of screener of these stocks to you guys. So if you guys are interested in what you guys want with Seeking Alpha, you guys can check out the description of this video to use a link to buy Seeking Alpha in their platform. I think it's one of the best in the game right now. So if we type in ticker symbol PG, we can see their dividends at a glance, and we can see that Procter Gamble pays out a 2.43% dividend yield, and it has a $3.65 annual payout per share of holding PG. They have a 5-year growth rate of 5.78%. So every year they're going to be increasing their growth of their dividend almost 6%. And they have 66 years of consecutive dividend growth, which is great to see because this qualifies as a Dividend Aristocrat stock. As we can see, they have an A scorecard by Seeking Alpha on their dividend growth grade. So we can see that they have an A with all these dividend growths from 2013 at $2.37 dividends annually to what it is now, growing up to over $3.61 in dividend growth. We can see their dividend history. They have an A+ for a consistency grade and an A+ for dividend payments. As you can see their chart, they consistently can increase their dividends quarterly to you as an investor because they're probably going to be making a lot of money in revenue, so they pay this out to the investors. Now, the cool thing about Seeking Alpha is that they have a dividend estimate. So you could see the dividend estimates and what they believe is the consensus on the future projection of their dividends. So they predict that in 2024, PG will have a $3.92 annual dividend, and in 2025, over a $4.13 dividend. So most likely the stock's going to be making a lot of money in the future. They're projecting higher growth, higher earnings, higher revenue, and therefore a higher dividend. So if we go to the profitability, we can see that PG gets an A+ in the profitability scorecard with hitting almost a perfect score, or practically a perfect score in the profitability metric. So they're making a lot of money, great balance sheet, great financial health of the company. If you look at the momentum, so what the momentum is basically the price movement of PG over that compared to the S&P 500. So we're going to be looking at the total return. Now, total return takes into account their dividend payment. So in the past year, PG is actually up 0.01%, and the S&P 500 is actually down negative 9.7%, or 8.97%. So PG is outperforming the S&P 500 in the past year by quite a bit of a margin, breaking even on your investment. And the past 5 years, PG is actually outperforming the S&P 500 by quite a bit, over 119% total returns versus the S&P 500's 68.15%. So PG is totally outperforming it. The S&P 500 totally crushing it in the past 5 years. And the past 10 years, PG is up 154.60%, and the S&P 500 is up over 216%. So PG, the past 10 years, has been taking some time to actually rock in its share price. So it's been doing very, very well in the past 10 years, amazing the past 5 years, and very good in the past year, staying less volatile and being risk adverse to investors while paying a high dividend. So all in all, PG is great for Dividend Aristocrat stock to own for life because they have great profitability, great finances, sticky products, and even better dividend payout to you as an investor. That's our first best Dividend Aristocrat stock to own for life. And let's go to number 2, which is going to be PepsiCo. So PepsiCo needs no introduction. It's Pepsi. Pepsi does many things. It manufactures, markets a lot of sale of beverages, foods, and snacks. So they have all these different products. So we can see on their website, if we accept all the cookies, they have all these different products on the website. You could go and check out their brands. You can see their brands or products. They have all these different brands like Quaker, Gatorade, Mountain Dew, Lay's, Starbucks, Frappuccino, coffee, all these different products that are going to be super sticky. So in a recession, when people want to buy these products, they're still going to be buying their chips, their coffee, their Gatorade, their drinks, etc. They're still going to be buying that sweet taste of Pepsi. So this company is still going to be making great money during a recession, and they're going to have steady profits that are going to be very predictable, and you can sleep at night while buying PepsiCo stock. If we look at Seeking Alpha and type in PepsiCo, or ticker symbol PEP, we can see their dividends at a glance, and they have a 2.53% dividend yield and a $4.60 annual dividend payout. So that's how much you will get paid out per share annually if you hold PepsiCo stock. In the past 5 years, they had a growth rate of 7.39%, growing that dividend over 7% year over year, and over 50 years of dividend growth. So PepsiCo is not going anywhere in that dividend payout. Their dividend growth has a scorecard by Seeking Alpha with a high dividend growth grade. And if you can see why they have that dividend growth grade, because in 2013, they had a $2.24 annual dividend. They've increased that over time to what it is now at over $4.52. So they're nearly doubling their dividend in the past 10 years. And if you look at their dividend history, they get an A+ for consistency grade. So they have a very consistent dividend payments, high dividend growth scorecard of an A+. And we can see that in the stock and the chart right here. They're increasing their dividend quarterly from 50 cents to just over $1.15 quarterly. So they're just making so much money, they're going to be paying that out to you as an investor. If we look at the dividend estimates, Seeking Alpha estimates PepsiCo to have a $5.26 annual dividend by 2024, and 2025 a $5.63 annual dividend. So projecting PepsiCo to make more money over time and pay that out to you as an investor for holding their stock and rewarding you for investing in them. If you look at their profitability, they have an A+ scorecard, great stock to buy, with great financials, great health, so great profitability thus. And if we look at their momentum, we can see their total return versus S&P 500. They're up over 10.29% in the past year, while the S&P 500 is down 8.97%. So PepsiCo is absolutely destroying the S&P 500 in the past year. Great returns, even better dividends. The past 5 years, PepsiCo is up 94.34%, while the S&P 500 is actually up 68.15%. So PepsiCo is outrunning the S&P 500 in the past 5 years, and in the past 10 years, PepsiCo is just barely underperforming the S&P 500 with 203.81% total return versus the S&P 500's 216.63%. So all in all, PepsiCo is a great stock, great products, very sticky products. All these products can be bought whether it's economy's in a recession, whether it's not, whether it's a high interest rate environment, and whether it's not. They have great financial health, so they can pay out this consistent dividend to you as an investor, and they even have better returns with high stock price growth. So that's going to be number 2, and PepsiCo, ticker symbol PEP. We look at number 3, we have McDonald's. McDonald's Corporation, no introduction. McDonald's, the fast food chain, one of the best in the game. Ticker symbol MCD. So McDonald's it's a franchising of restaurants. So they buy all these lands as a franchise of restaurants. They have all these different fast foods things you could buy. I don't need to get too much into it. We all know what McDonald's is. Burgers, fries, everything. It's a very well-known company, very well-known and sticky fast food chain that people will consistently go to because they have cheap products or cheap value for their food. Food's very delicious. People will continue to buy into it. Whether it's in a recession, people are still going to go to fast food because they're going to be not, buying all this fancy stuff, expensive food. They're going to be going to your McDonald's Corporation and buying their delicious fries with a Coke and their cheeseburgers. So that's McDonald's. I go to Seeking Alpha. We can see MCD. We can see their dividends at a glance. So McDonald's has a 2.15% dividend yield, a $6.08 annual payout. That's a large annual payout, so they're paying a lot of money to you as an investor. They have over 8.26% 5-year growth rate in their dividends and over 21 years of consecutive dividend growth. So that's what's amazing about McDonald's. They have a great stock with great dividends. If we look at their dividend growth, dividend safety, I believe. Yeah, dividend growth. Dividend growth, you could see that they have a consecutively growing their dividends for the past 10 years, $3.12 in 2013, gradually increasing it to what it is now at $5.66 a share annually. And if we go look at their dividend history, they have a B+ scorecard with B+ for dividend payments and an A+ in dividend growth. So this stock is going nowhere with paying high dividends quarterly, as you can see on your screen. They're consistently paying out quarterly from the lows of 77 cents back in 2013 to what it is now at $1.52 per quarter. So this stock is making a lot of money McDonald's keeps on making a lot of money year over year. They keep on doing different products, different ways to make consumers come in their restaurant or their fast food chain and spend their money at McDonald's. We can see McDonald's consensus dividend estimates. So Seeking Alpha projects McDonald's to make a $6.43 dividend in 2024, and by 2025 to have nearly a $7 annual payout in dividends. So Seeking Alpha predicts McDonald's to keep on growing, to keep on making more money, and thus pay out you as an investor more dividends. Look at the profitability. McDonald's, of course, gets an A+ scorecard. So they have an A+ in profitability. They're going to be making a lot of money, a lot of net income, a lot of operating income, a lot of gross profit. If you look at the momentum, we can see the total return versus the S&P 500. We can see in the past year, McDonald's has totally outperformed the S&P 500 with 16.95% total return, and the S&P 500 has a negative 8.97%. So McDonald's has totally outrun the S&P 500 in the past year. In the past 5 years, we can see McDonald's up 97.97%, and the S&P 500 is up 68.15% in the past 5 years. And in the past 10 years, McDonald's has actually outperformed the S&P 500 with 269.47% total returns versus the S&P 500's 216.63%. So even in recession, like what people are saying we are in now, McDonald's is making their stock price still going up. They're still making money. They're still beating on earnings. And McDonald's is a great stock to own for life as a Dividend Aristocrat. You can sleep at night knowing that this stock's going to be making money. It's going to be generating a lot of money to you as an investor, paying out high dividends, great balance sheet, great financials, and great sticky products that people can go to, whether the economy is in a recession, whether we're not, whether we're inflation, whether we're not. So McDonald's is a great stock to own for life as a Dividend Aristocrat stock. Let's go to number 4 on our list. We have Caterpillar, ticker symbol CAT. So if we look at M1 Finance, we can see Caterpillar engages in manufacturing of construction and mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel electric locomotives. So Caterpillar is basically a producer of manufacturing, of trucks, construction, farm machinery. You can see on the website, they're one of the most sustainable U.S. companies, and they're pretty much in that space of manufacturing, and they do all these different things that are well needed in the world, especially in the United States and our economy. So you guys can check out the website if you guys want to learn more about what they do. So if we look at Seeking Alpha and type in ticker symbol CAT, we can see their dividends at a snapshot. So Caterpillar pays a 2.21% dividend yield and a $4.80 annual payout per share of Caterpillar stock. They have a 5-year growth rate of 8.66% and 29 years of dividend growth. So Caterpillar is going nowhere as they are a much needed stock in the US economy and thus the world. Look at their dividend growth. They get an A in the scorecard by Seeking Alpha because they exceed their dividend growth. In the past 10 years, they have a $1.72 annual dividend in 2012, and they're consistently growing that year over year to what it is in 2021 of $4.62 annual dividends. And if you can see their dividend history, they get an A+ for consistency grade of dividend growth and an A+ or an A in dividend payments. We can see in the past 10 years, they're increasing that dividend quarterly from 52 cents in 2013, gradually increasing it to what it is now of $1.20 per quarter. The Caterpillar stock is making a lot of money. Most likely going to be paying it year over year to you as an investor, as they're going to be having a lot of more disposable income to generate and to pay out to you as an investor. When we look at their dividend estimates by Seeking Alpha, we can see that Seeking Alpha estimates a $5.26 dividend in 2024 and a $5.52 annual dividend in 2025. So the Seeking Alpha is going to be projecting Caterpillar to make a lot of money over time and thus pay out to you as an investor because they project that Caterpillar is most likely going to be a well-needed stock with all their products and all their services. So that's what's great to see. Look at their profitability. Caterpillar has an A+ net profitability scale by Seeking Alpha. So they're probably making a lot of money, a lot of returns on their equity, on invested capital. So they get an A+ on that profitability grade. And if you look at the momentum, we can see the total return versus the S&P 500. We can see that Caterpillar in the past year is up 7.78% versus the S&P 500 is down 8.97%. So Caterpillar is totally outperforming it lately in the past year. In the past 5 years, Caterpillar is up 69.66%, and the S&P 500 is up 68.15%. So Caterpillar is keeping in line with the S&P 500 and actually outperforming it in the past 5 years with that healthy dividend it pays out. In the past 10 years, Caterpillar is outperforming the S&P 500 with 239.63% total return versus the S&P 500's 216.63%. So Caterpillar is a great stock to buy and own for life as a Dividend Aristocrat stock, has very sticky products and services that are well needed in the economy and in the United States. They have great profitability, great dividend growth, great dividend payments that are consistent and consecutive, and they even have greater returns to provide to you as an investor over time if you're long on this stock. So that's our one of our stocks, Caterpillar. We go back to M1 Finance, we could see number 5 on our list, it's Coca-Cola. So Coca-Cola, ticker symbol KO, we could see Coca-Cola needs no introduction. It is a manufacturing and marketing of non-alcoholic beverages, Coca-Cola. So we can see their brands on the website. We can see that they have 135 years of refreshing the world, Coca-Cola. I think so they have Coca-Cola, they have Diet Coke, Fanta, Sprite, all these different brands under the Coke brand. So they have all these different brands that are going to be well needed in a recession, whether the market's up, whether it's down. People are still going to be buying that delicious Coca-Cola soda. They have, Dasani water, coffee, Body Armor, Fanta, all these different products, Fairlife milk, all these different products are going to be sticky and well needed, whether the markets are going to be up, whether we're in a recession, inflation, interest rates. We don't care. Coca-Cola stock's still going to be making a lot of money over time. So that's what Coca-Cola does. No introduction with that. If we go back to Seeking Alpha, we could type in ticker symbol KO and see their dividends at a glance. So Coca-Cola pays out a $2 or 2.96% annual dividend, which is super high, with a $1.84 annual dividend payout. They have a 5-year growth rate of 3.48% and over 16 years of dividend growth. So Coca-Cola is a great stock to own, high dividends, high consecutive growth year over year. They have A on the dividend growth rate by Seeking Alpha, and we can see why, because in the past 10 years, they've increased their annual dividend from $1.12 in 2013, increasing it over time to what it is now at $1.76 in 2021. And we can see their dividend history. They have an A+ for consistency grade. They have high dividend growth of an A+ and dividend payments of an A+. And quarter over quarter, they're having that 28-cent quarterly return on dividends. Year over year, just increasing it steadily over time to what it is in 2023 of 46 cents quarterly payout of dividends. And they have a dividend estimate score of $1.91 by 2024 and $2.01 by 2025. So the Seeking Alpha estimates that Coca-Cola will pay over a $2 dividend by 2025, which is going to be great to see, as they're going to have sticky products. They're going to be making a lot of money over time and thus paying it out to you as an investor. Coca-Cola has an A+, of course, in profitability grade. They're making a lot of money on other products and other services they do. And if we see at their momentum, we can look at their total return versus the S&P 500. So Coca-Cola has a 2.42% total return versus the S&P 500. It's down 8.97%. And Coca-Cola is totally outperforming the S&P 500 in the past year with all their products and services. In the past 5 years, the total return is up 67.94%, which is just underperforming the S&P 500 of 68.15%. And in the past 10 years, Coca-Cola is up 109%, as the S&P 500 is up over 216%. So Coca-Cola is still making a lot of money. It's still having good returns year over year and can provide you with high dividends, sticky products. They're going to be less risky, less volatile. Warren Buffett's one of his top holdings is Coca-Cola. So that's why I included it on this list. Let's go to another one. Let's go to number 6 on this list, which is going to be J&J Johnson & Johnson, a family company. So Johnson & Johnson is a pharmaceutical company that basically manufactures and sells a lot of products in the healthcare field. We can look at their website. They do many things. They have all their products. I believe they should have all their products somewhere on the website. If they don't, you guys can check it out. They do a lot of things and have a lot of sticky products in the pharmaceutical world. We can look at their products right here. We can see they have many things that they do. They have consumer health products, they have pharmaceutical products, and they even have other different products and researches that they do, such as medtech with surgery, vision, orthopedics. They have healthcare products like in self-care, healthcare beauty. So you guys could check all that out. If you want to look at their website, you guys can click on it at Seeking Alpha. So if we go to J&J on Seeking Alpha, we get to see their dividends is going to be 2.85% annual dividend yield with a $4.52 annual payout. They have over 6.11% 5-year growth rate and a 60-year dividend growth rate. So this company is going nowhere. They're paying their dividends every year for 60 years, and they're making a lot of money and paying it out to you as an investor. They have the A in the dividend growth grade with a great dividends. So they're going to be having great dividends consecutively year over year, increasing that dividend annually. They have from 2013, they have $2.59 annual dividend, increasing it annually to what it is now of $4.45 payout in 2021. You can see their dividend history. They of course have an A+ in consistency grade, an A+ in dividend growth, and an A+ in dividend payments. We can see why, because every year, quarter after quarter, there was increasing that dividend payment quarter after quarter from 61 cents to what it is now to over $1.13. And their dividend estimates, they have Seeking Alpha is estimating J&J to have a $4.93 annual dividend in 2024 and over $5.15 in 2025. So Seeking Alpha predicts J&J to make a lot of money over time, pay out these dividends to you as an investor, and make some good money and hopefully revenues and profits to have their share price go up over time. Look at the profitability. Of course, A+ profitability grade. They're going to be making a lot of money, have a strong balance sheet, and strong financial health. If you look at their momentum, we can see that they have a negative 7.76% total return versus the S&P 500, and the S&P 500 is down nearly 9%. So J&J is outperforming the S&P 500 technically, but it's still down in the year, which is okay. In the past 5 years, J&J is actually up 41.05%, and the S&P 500 is up nearly 70%. So J&J is still tracking in line with the S&P 500, being a little bit less volatile, but still pays out a consistent dividend. In the past 10 years, J&J is up 151.43% versus the S&P 500 is up 216.63%. So over time, J&J, it's a pharmaceutical company. It's going to be kind of stable and steady. It's going to be having some great returns to you as an investor. It has great profitability, great products that are super sticky, and they're going to be consistently researching new products and having products that are going to be well bought and well loved in the economy and hopefully the world. J&J has a great stock with great dividends and even greater stock price appreciation. So that was number 6 on our list, being J&J. If we look at the number 7 on our list, we have Walmart, ticker symbol WMT. Walmart needs no introduction. It's a retail and wholesale business company that has, they sell all these different products at any Walmart. Walmart doesn't really need an introduction. They basically sell all these different products that anyone could buy. They have many chains around the world and many stores around the world. So if you guys want to check what Walmart does, you could look at M1 Finance for that. If we look at Seeking Alpha, we could see what Walmart dividends are. So Walmart has a 1.55% dividend yield and a $2.28 annual dividend payout. They have a 1.88% 5-year growth rate and 49 years of dividend growth. So Walmart is going nowhere. They're making all this money within their wholesale business and even their e-commerce business as well. If we look at their dividend growth, they have an A scorecard on the dividend growth grade by Seeking Alpha. And we can see why, because in the past 10 years, they're increasing that annual dividend from $1.87, increasing it gradually over time to $2.24 in 2021. They have an A+ from consistency grade. They're having a high dividend growth and high dividend payments. Walmart is having great dividends, paying out consistently quarter after quarter and year over year. As you can see, their dividend history, they're paying it out quarterly, increasing that dividend over time. And dividend estimates. So Seeking Alpha estimates Walmart to have a $2.38 annual dividend, and 2026 to have a $2.47 annual dividend, So that's good to see that they're going to be projecting higher dividends year over year as they make more money, have more disposable revenue to pay out to you as an investor. If we look at their profitability, of course, A+ profitability, great company to buy and hold forever, great financials, great balance sheet. Look at their momentum. We can see that they have in the past year, Walmart's down only 0.97%, and the S&P 500 is down nearly 9%. So you can see on your screen, they're actually outperforming the S&P 500, even though they are down. In the past 5 years, Walmart's up over 85.52%, as the S&P 500 is up only 68%. So Walmart actually outperforming the S&P 500 in the past 5 years. And in the past 10 years, Walmart is up 141.25%, while the S&P 500 is up 216.60%. So Walmart is a great stock to own forever as a dividend aristocrat. Great dividends, great company. They have a great business model, and they're going to be having great dividends due to high share price growth and due to making a lot of money and retaining their net income and having great revenues. So that's why it's going to be included on this list. If we go to our last choice, what I chose was Realty Income, ticker symbol O. Realty Income is a real estate company, so they are a REIT, which engages in generating dependable monthly cash dividends from a consistent, predictable level of cash flow operations. So basically, they are a monthly dividend REIT that pays out dividends monthly versus quarterly. They have a portfolio of different real estate properties that they own. They're very diversified. They have, as you can see on the website, they have all these different geographics, all these different properties that they own. So if you guys want to check out what they actually invest in their REITs, you guys can look on their website. If they go to ticker symbol O on Seeking Alpha, we can see that their dividends, they have a high dividend of 4.87%. Now, REITs typically pay out a higher dividend than usual, so that's why we see a 4.87% dividend yield. They have a $3.06 annual payout and 3.78% 5-year growth rate. And they've actually increased the dividend consecutively for the past 26 years, so they can have high dividends that are going to be paid out to you monthly. You can depend on it year over year or month over month. They have a B+ on their dividend growth grade, and we could see why, because in the past 10 years, we can see them increasing their dividends annually from $2.11 to over $2.97 in 2021. So it's great to see they're going to be increasing their dividends annually as they're going to be making more money in the real estate business. We look at their dividend history. Of course, A+ consistency grade. They even have an A in dividend payments and A+ in dividend growth grade. So you can see a lot of low lines because they're paying out monthly. So they're increasing it from 18 cents in 19, 20, 21 to now 25 and now 26 cents monthly to you as an investor. If you look at their dividend estimates, Realty Income is projected to have a $3.16 dividend payment annually in 2024 and $3.26 in 2025. So this company is going nowhere, so they're making a lot of money and paying out to you as an investor monthly. Look at the profitability standpoint, these REITs are generally profitable. They have an A on the profitability grade. And if we look at the momentum, we can see in the past year, Realty Income is down 6.82% versus S&P 500's 8.97%. So Realty Income, ticker symbol O, is actually outperforming the S&P 500, even though it is down. In the past 5 years, Realty Income is up 55.71% versus the S&P 500's up 68.15%. So Realty Income is still keeping in line with S&P 500 while paying a healthy monthly dividend. And in the past 10 years, Realty Income is up 121.97% versus S&P 500's up 216.63%. So Realty Income is going to be a great monthly dividend payer with great dividends, great consistency of their dividends, great profitability. So if you guys want, you guys can check them out on my M1 Finance list as some of the best stocks of Dividend Aristocrats to own forever. So if you guys want, you guys can look at M1 Finance and the link I have in the caption to look at all these dividends of the dividend stocks that I've chosen. You can see this portfolio is up 54.53% in the past 5 years with a 2.59% dividend yield. So that pretty much wraps up this video of the best dividend aristocrat stocks to own for life. Hopefully you guys enjoyed this video. If you guys have any questions, let me know in the comment section. If you guys like this video, please leave a like because this cute puppy did. and love you guys so much. Hopefully you guys have a great rest of your day and continue to crush in the stock market and get paid some healthy dividends to have some passive income.